Well, hello everyone. Welcome to Trading a Smaller Account. My name is Barbara Armstrong, and I'm excited that so many of you are here and ready to roll with me this morning. I've got all kinds of great stuff I want to talk about, and as many of you know, I started on this journey back in 2011 as a client. I joined this education team in 2016 as a coach, and I still get really excited to look at the markets and talk to you about my thoughts and the disciplines of trading and the psychology of trading. And I found some notes that I probably wrote over 10 years ago. It was another coach who I really admired, and he talked about, being disciplined, staying focused, not taking shortcuts, and the rewards will come. And I've now been teaching this class for about 5 years, and we have seen the rewards come. We've developed disciplines, we've done, and we've had some success in this account, which we reset to $20,000 every year at the beginning of the year. I don't know, I'm kind of toying with maybe just resetting it to 25,000, with inflationary pressures, but we'll see come the beginning of January. But we have a couple of trades we're going to manage today. We have about we've got close to 20 trades still active in our account. And we're going to place a bunch of new trades today after we look at some trade management on just a couple of them. So let's buckle up and get right down to business. If you are not following Mike Fairborn and I on X, I invite you to do so. My handle, Barb Armstrong CS. Mike's is Mike Fairborn CS. Both Mike and I are posting content on a daily basis that we think you'll find helpful and informative. I tend to post at least one chart every day. If I see, I've seen a lot of cup and handles lately. Somebody said, boy, every time I look at a chart now, I see a cup and handle or an inverted head and shoulders or, a diagonal breakout, because we've seen a lot of all of those things of late. If you're not following us there, you're missing out. So just a reminder on that. We've got Mike with us in the chat today. He's a friend and a fellow coach. He knows all these strategies we're going to talk about today inside and out. So if you've got questions, don't hesitate to ask. Just a reminder before we get into the thick of things today that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money desktop platform on Thinkorswim. It is a brilliant place to learn, to make sure that we understand our trading strategies, that we have a trading plan in place, that we know how we're going to use that plan, both if it goes for us or against us. And so be there, be square. There are some differences and nuances and differences between the platform. One is that dividends are not paid in a paper money account. They are paid in a live account. Of course, dividends can be discontinued at any time, so we have to keep that in mind. Another difference is that short options will never be assigned early in a live account, but that can happen in a paper money. They will never be assigned early in a paper money account, but they can be assigned early in a live account, and I've seen it happen. Okay. So like I said, if anyone is here for the very first time, feel free to type a greeting into the chat so that we can welcome you. We link arms here at high noon every Monday and every Friday. We start each year with 20,000. And this year was a little different in that we started our account in November of last year. And so we're going for 14 months instead of the usual 12. Our max position size, 5,000. And the most we want to risk on any particular trade is 500. Now that the account has grown as it has, maybe 550. Our focus in this class is on the short to intermediate term time frame. We have a few buy and holds in our account, and that's unusual for us. Most of what we do in this class is more shorter term trades where we're looking to be in and out of a trade within, days to weeks. We don't have many positions that we've been holding for months. Okay, so let's get out. And what we usually start with is, we're going to talk about Reddit today. We usually start with looking at the indices. So S&P 500 hitting a new all-time high today after a little pullback yesterday, up 27%. I mean, just having an extraordinarily bullish year. How about the NASDAQ? It too hitting a new all-time high today. It too, up 20, it's ahead of the S&P by a hair. up 28% year to date. Like, it's pretty hard to look at that and characterize it as anything other than bullish, right? Right, just say yes. Okay, how about the Russell? This is our small caps, 2,000 of the biggest of the small boys. And it too is up 18%. After it took, a 2-year time period there where it spent a whole lot of time going nowhere. And, it kind of galloped up, hit a new all-time high for this index, and then it's been going sideways. I would characterize that as kind of a bull flag and a stiff breeze. If you're looking at this as a shorter term pullback, we've got this down day yesterday, today's body, and this is a live candle, so it could change, but totally inside the previous days, that Harami pattern is considered to be a bullish sign. So there we go on that one. And how about the Dow? The Dow 30, this is based on the price of the 30 stocks within it as opposed to their market cap. But, it hit a new all-time high this week too. So, and again, this is kind of like that bull flag and a stiff breeze went up. And then as opposed to, just let me get my drawing tool. Oops. You can tell I posted something on X. That was the last thing I did yesterday. So it came up, and instead of, pulling back as we sometimes see, it's kind of gone straight out as a flag will do in a stiff breeze. Yeah, so that's what we've got going on there, but pretty bullish on that front also. And how about our volatility or fear index, as some would call it? So the VIX sitting at 13. But, that isn't a year low. It went down one day, and, we have a really long wick on that candle. It went down to 1062. But this is, in that range of the lowest it has traded all year. So there would appear to be a lot of confidence in the market. Can we say that? Yes, I think we can. In fact, I just did. Okay, so when we look at the indices, and this is just a public watch list, S&P 500 sector indices, who's been leading the pack? Consumer discretionary, communications, technology, and financials. And, in fifth place, we've got industrials, but, all very strong. And has that changed? Are we seeing some rotation out of those sectors? No. Well, this is interesting. Staples all of a sudden coming up. But consumer discretionary hitting a new all-time high today. Communications, new all-time high today. Technology, new all-time high today. That's a lot of highs. How about financials? So financials have kind of fallen out of favor in the last month because we've had just a bit of consolidation. But it's like what? Within the last 2 weeks, it hit a new all-time high. So Roy, if you've not got sound and video, can you type a note in there, Mike? Just a sec. There we go. Okay, so there we have it. Let's see. Okay, now let's go to Reddit. So I made an executive decision yesterday because I was looking at our positions. I'm trying to kind of turn over a new leaf and be the responsible coach who looks at her paper money account. I finally have unpacked my suitcases and put them away for the month of December. But it hit our target today. Now, what I will tell you, so on Monday, we placed 2 trades. We bought some shares of stock, and we didn't have very much money in the account, so we couldn't afford to buy $5,000 worth. We bought about, $3,000 worth of stock. And then we put in a target of the previous high, this 158. And then we also bought a call. And yesterday we had this spinning top pattern. It actually closed down on the day, but when I looked at it, it had a spinning top saying, hey, it may have reached its high. And so I chose to exit those 2 positions yesterday. Now, had I been patient and waited until today, it would have come up and hit our target and we would have made even more. But I did exit those positions yesterday. And if we look at those, like, we made out like a bandit, basically. Even exiting early, The long call that we bought, we got out of it at 825. So we were up 72% on that trade, and we made a dollar gain of 345. Now we would have made, if we'd waited, we got out at 154, call it 155, we would have made another $300, or $3 a share. So, and I think we had 20 shares. So we would have made another $60 on the stock trade. And I'm not quite sure what the difference would have been here. But we would have made a little bit more there. But as it turned out, we still made $263. And that was a 9% return on a trade that we were in, for 4 days. And I did actually record a mini session on that. So you can look for that. And I just kind of walk through the thought process of, the advantages and disadvantages of stock, having a stock position, a long stock position versus a long call. So if you're wondering, like with the mini sessions, this is where I'll, insert my comment and say, you'll want to subscribe to this channel. There's a button there in the bottom right corner if you haven't already subscribed. And when you start out, it will show you whatever is playing now or whatever's coming up next. If you go to playlists and then you come down to trade management mini sessions, this next mini session it'll show up in orange, and it'll be at the top of the orange pile. The last one I did was 2 weeks ago where we compared long and short verticals. But the Reddit trades, and somebody had said to me, I'd really love it if you'd put the ticker symbol in the title. I can't do that. But I do, as soon as you click on it, I tell you what the stock is that we're talking about. Because we did one where we did 3 bullish trades, and I think that was Lulu. But there you go. And then if you're not super familiar with some of these trading strategies, today we're going to talk about long call verticals. We're going to talk about a buy right covered call, and I'm going to record the mini session for that on Monday. So look for that next week. So all these ones in blue are example trading plans, and there will be a new one next week. The next one I'm going to do is a buy right covered call. Okay. So back to our regular programming. So that was Reddit. The other one that I took a vote in the short vertical class that I treat as a companion to this class, and we had a position on Oracle, a short put vertical expiring today. And I was kind of tempted to just wait until this class. And I said, no, let's vote on it. We're 40 some dollars shy of taking a max loss if we exit now. But if this were in a live account, there is a risk of assignment of the short strike being assigned. Do we stay for one more day? We'll close it out tomorrow no matter what. Well, if we had waited, we'd probably be out now for a small profit rather than exiting yesterday for just shy of a max loss. So do we take ourselves out to the woodshed and beat ourselves up for closing this trade out yesterday? Now, in paper money, we'll never be assigned early, but in reality, in a live account, we could have. So we made the best decision we could with the information we had at the time, and we closed it out. Now, if we're looking at this now, could we place a new trade? We could. And you might say, we just got burned by Oracle. That stock is dead to me. Kevin is saying, could we have rolled the short put vertical? Rolling is really just closing out the current trade and opening a new trade. And if the trade is going wrong, my kind of view on rolling is, if you wouldn't place that trade today, don't kick a bad trade down the road. That's just my view on it. And so, we made an informed decision. As it turned out, we would have been better to have waited till today, but the short put vertical on Oracle we're now out of. But we do have a setup that, could we do a new one now that this trade is done and maybe put our strikes lower? That possibility. Okay. So I'm just having a quick look at the script. Somebody's saying second guessing is not allowed. And I think it's worth going back and looking at decisions that you make and saying, was that the best decision? And I think that sometimes the best decision turns out not to be the most profitable decision, but sometimes you'll go back and go, ooh, I didn't follow my rules on that and it cost me. So being disciplined in how we approach things. So we were disciplined enough to see that this was a trade that was expiring, that we were underwater on it, that we were at risk of assignment, and we made the best decision we could at the time. And we took a vote. It was, I think, 65% said, close it out. And so that's what we did. Somebody's asking how I add that 3-month gain loss on the watch list. And what I will tell you is that I did record, where did they go? I had it here. That paper money, that trade management mini session, if you keep on scrolling down, there's a whole series in turquoise of mini sessions on the S&P 500, on the Thinkorswim. I can't talk today. And there's one on watch lists and on customizing the watch list. And so you can go and watch that. It's about 10 minutes long. There's also one on customizing your charts, on customizing the monitor tab. So there's a bunch of little minis in there. Okay, so let's look at trade number 1 for today. So we're going to look at Unity. Oops. Third time's the charm. So when we kind of step back a bit and we look at a year-to-date chart, like this thing, got hammered, right? This is a tech stock, Unity Software. It fell from 40 to 13. So, it and Humpty Dumpty rolled a long way down the hill. But then we saw this candle pattern, which I now laugh every time I see it after somebody said, all I'm seeing after, being in your classes, et cetera, I'm seeing these everywhere I look. And the truth is there are a lot of them around. And I think this is another one of the ones I posted on X. But, we've got, here's the cup, here's the handle. And as a technician, when we look at this, we're going to measure from this 13.9 to 23.2 and say, well, about a $4 move, 13, about a $10 move. I can do math, honest engine, about a $10 move. And so you'd say, okay, if this is what this range is, I'm looking for about a $10 move to the upside. Now, it's really, when it broke out, man, it did that with gusto, but it's amazing how often we'll see something, come back and retest, right? So right now it's at 27, and I have a feeling this is a stock that might have a lot of volatility, as Mr. Boyd would say. So could we come out, say, well, what if it only pulls back for one day and then takes off again? When I come back in here up close and personal again, it broke out, came back for one day, and then took off. Could we buy 100 shares? We have enough money. This is, a $27 stock. Actually, we could buy 200 shares and still be kind of, within our ballpark. But if we bought 100 shares, could we sell a covered call? And worst case is we get called out. And, if we're happy with that profit, we're good to go. But if it does come back here, could we then buy that call back, make some money, and then still be in the trade when it bounces, and then maybe when it comes back up here again, sell another one? Now, that might never happen. The pullback might not happen. It could go up and we could get called out, or it could come down and then keep on falling and we could end up losing on the trade. We do not have psychic powers, but it's an opportunity. And what do we want to do with it? So if we come to the trade tab, we say, well, does this have a fair bit of volatility? And could we come out, even coming out 3 weeks, volatility is over 100%. Is earnings coming up? Well, no, it just had earnings. So this is just one of those stocks that's pretty volatile. And so if we look at this and we say, could we even just go out to December 27th? We're going to have a couple of days where the market is closed or has a short day in addition to the weekends. It's trading at 27. If we sold the 30 and we get paid 225 to 236 for that, how much could we make? Well, I like the way you're thinking. And our rule is, does it trade more than 1 million shares a day? Check. Is there lots of option activity? Check. Is the bid-ask spread tight? Check. So we got check, check, check. So we're looking at, we call this buying covered stock because we're buying 100 shares, covering it with a call. We're paying $25 a share, 25, 24. So what's the most we can make? 475. Well, if we could make 475 on a $25.24 investment, that's got to be like 20%, 18.8. So if you met with somebody for New Year's and said, can you believe this woman suggested I do this trade, sell a cover, like the most I can make is 20% in under a month. Like that's like, excuse me, like that's ridiculous. Now we could also lose money, and we have lost money as early as like yesterday. Okay. So where might we if we want to define our risk to the downside, because remember, we don't want to risk losing more than $500. Well, could we come here and say, I see this 23 as being a support level. It broke through, came back to retest. So if we put a stop, let's say it's a volatile stock, let's say 5% below that times 0.95. So we're going to put our stop at 22.12. So if I come to the trade tab and say 22.12, well, I'd be down, about $315. Is that less than 500? Yeah. Yep. So you know what? We're going to do that. Okay. So I'm going to come to single order, first trigger sequence, right click, create an opposite order, because if we're selling the stock, we want to buy back that call. We don't know exactly what the price on the call will be. Got to move my water bottle. Okay. We're going to make that good till canceled. And disappearing, reappearing sprocket. So we want to exit this position if Unity goes at or below 22.12. And the goal on this is to be able to, if we get called out, we're happy campers. And this is a different entry than we normally look at because usually we'd want to get in when it's bouncing and then sell our call in the middle of the road. In this case, we're saying, hey, this could pull back. It looks like it's pulling back today, but our choice is if it comes back to that 23-ish level, we could just buy back this call and then wash, rinse, repeat. If it does go up and we get called out, this is a really nice return. Even if it goes up to 35, you're going, dang it, I would have made more had I not sold that call. Well, maybe you wouldn't have placed the trade at all if you hadn't sold the call. So, one of my favorite lines, don't be a greedy guts. Like, an 18% return if we're called out is pretty stellar. Okay, and now, so we're saying if it goes below 22.22, we're out. The most we can make on this, $477. Yeah, for us, using our baseball analogies, that's a triple. That's not just a base hit. That's a really nice gain. And we're going to come and put this in our buy right covered call bucket. Make a note that this is, with a stop, there isn't a guarantee. We know that. This is a weekly option, but there's still lots of volume on it. So we understand that. And yeah, there we go. Fire in the hole. So we have a plan for how we're going to manage it. Okay. Okay. So that's our buy right. Let's now go to American Express. Okay. Remember, you're not supposed to leave home without it. Isn't that American Express? Yeah, so here's a stock up 62% year to date. So, been leading, certainly outperforming the indices. And, that's not a bad thing. So it's come up and we've got this bull flag happening. Do you see what I see? Didn't somebody sing a song about that? Isn't there a Christmas carol? And today we've got that close. Well, it's not the end of the day yet, but it looks like it's trading above the high of the low day. So do we have an entry? We do. We do. Okay, so we are going to look at, if we're bullish, if we're thinking this could go up, could we do a swing trade to the previous high? We could. Could we just do a long call vertical? We could. Yeah. So we're going to do a long call vertical. Okay, so it's currently trading at 303, and we tend to trade these conservatively in this class, and by that I mean our strategy, which has worked fairly well for us this year, and that could change at any time, is we're going out typically 20 to 50 days. If we're looking at this 21 days, if we're short term, more bullish, if we do this 300 and the 305, we're already over halfway to our target, which is for it to go above 305 and stay there. So we're going to right click. We want to buy a vertical. This is sitting at 280. And my goal used to be to make every single penny I could on these. And I was very seldom successful. And so I changed the goal and said, how about if we had a goal of 50%? Even though we could lose 280, we could make 220. How about if we said if we could make 140 of that 220, we'd be happy. So that's what we're going to do. So we're going to come to single order, first trigger sequence. We're going to do 2 of these. We're going to right click, create an opposite order, and say when this gets to 420, which is 150%, of the current price, 50% higher, 420. So this is a limit order, so it'll execute that sell at 420 or higher. And we're going to put that in our bucket. So that's our long call vertical group. Now, could we also do, could we have considered a short put vertical? Sure. We could look at this, and if we take this line and activate it and say, well, hey, it kind of came out and hung out here around the 300 mark. Could we sell the 295? I just want to make sure we already have a short put vertical. I wonder if we sold the 295. I bet you we did that yesterday. So here's our short put vertical. We did exactly that. We sold the 295. We bought the 292.50. We were paid 58 cents yesterday. So we're already up 11% on that trade. So we've got that on. I'll put that on the chart later. And then we can compare and contrast the long vertical and the short vertical. So if you're not following the short vertical class on Thursdays, you should add that to your curriculum, because I do treat that as a companion class. Okay, so we've got that one. We've got the Unity. Well, seeing as we're talking about credit cards, how about we mosey on over to the competition? How about MasterCard? So yesterday we did a short put vertical on MasterCard, and then it bounced. So it came down, recovered yesterday. So, we came here and we did a short put vertical, 515 and 510. We're up 17% on that one. But could we add a long call vertical? And you may say, well, why didn't you do the long call vertical yesterday? Wasn't the setup there? It's like, yes, it was, but it was a short vertical class. And what do we do in the short vertical class? We do short verticals. We don't do long verticals. So today's our opportunity, and we may have been up nicely. I don't know. We're already at 529.34. So, but do we think it could come back up to 535? Well, let's see. So we're going to come to the trade tab, and we're going to come out this 3 weeks, 525, 530. We may have to pay too much for it, that there isn't enough room. So if we pay 3, we'd be out at 450, and it's 49 cents away from being through both our strikes. And so you might say, well, then maybe if it continues to go up for a few days, it would hit our target faster. I like the way you're thinking. So with this one, we're going to do just one. And I'm going to take my 293 times 1.5 and say, when this gets to 440, we want to exit. Now, and then we're going to do another, I'm going to compare this to another trade. So we're going to create an opposite order and say, when this gets to 440. Now you may say, wow, that's playing your cards pretty close to the chest. I grew up playing a lot of card games with my family. I grew up in the North. Winters are long. What can I tell you? But we're going to compare this to one where we do strikes 530 and 535 and just see how that works out with the 530, 535 strikes. Now we're going to have to go we're going to have to pick a different expiration. Otherwise, if I come in and buy this one, it will close this trade out. So we're going to come out to January 3rd. We've got 14 contracts. The bid-ask spreads on these are kind of wide. We don't have a lot of volume here either. So we may have to come to the monthly. So this is 42 days. Now it's going to be hard to do a really great comparison here because it's going to take longer for this to reach the goal because we've got more time. But if we're really bullish on this and we did the 530 and the 535, we're going to pay less for it, typically. Now we're going out 42 days and time has value also. But here we're paying 280. Okay, this doesn't even make sense. 350? We paid less for the other one. Well, I'm not doing that. Yeah, okay. I just had a thought as we went along, but that's a lot to pay for something that it's not even at oh, I see, sorry, 525, 530, my bad. I wanted to do 530, 535. Okay, erase that. Okay, so here now we're at 250. So, if it goes through both strikes, we're risking 255 to potentially make 245. Yes, so people are typing things into the chat like Lulu crushed it on earnings, like they gapped up big time. And we had done several trades, but we try and for the most part avoid trading over earnings. But so for this one, we're going to do two of these. And actually, you know what? We'll just do one so we can do more of an apples to apples. We just did one of the other one. First trigger sequence, right click, opposite order, and it'll be about 380 to, 250 is 375. Okay. That makes it really easy. And you're saying, but we're risking half of the potential gain on the table. Yes, we are. And you know what? We're totally cool with that. We're saying if we can make a 50% return on our investment in 45 days or less, like we're happy campers. We don't want to be greedy. We'd rather take the 50% and wash, rinse, repeat, do it a couple of times, than, get up 50, 60, 70% and then maybe give it all back and then some. Okay, so we're going to compare to the December 27th expiration. Okay, there we go. Fire in the hole. All right, so that was MasterCard, and we did two trades on MasterCard. So we've reviewed two trades. We've had a look at the market. We've placed trades on Unity, two trades on MasterCard, and a trade on American Express. Yeah. Yeah, we've got that Cahold setup, truth will always prevail, saying that. Yeah, just, we've traded Lulu a fair bit for those of you who are Lulu fans. And look at this, up 18%, up $64 a share. Woohoo. Yeah. Are we going to trade that today? Yeah, no, we are not. But it's like you don't wish the worst for a stock, but this has been, kind of on the struggle bus, right? Like it was just kind of breaking out here. And this is a pretty big pattern, like over $100. So interesting. Okay, so let's go. You want to do one more? We have a few minutes. We are clipping today. Okay, so let's go over and have a look at Microsoft. And then so Microsoft, this is one I posted yesterday. So it's been kind of consolidating, right? Like it's up 17%, which is modest. It's kind of lagging a little compared to, the major indices, but Microsoft has been around for a long time. And, if we're playing I Spy with my little eye, I see a stock that, has been consolidating. Oops, I always forget to shake the Etch-a-Sketch, so to speak. So we've got a double bottom, which makes me think of Queen. And then we've got this breakout happening. And so, could we do a short put vertical on that, saying, I think this is going to hold? And so I'm going to look at, and if you're not familiar with this strategy, I will put in a link to the Getting Started with Options series where there's a whole class dedicated to this. We're selling a put, and then to define our risk, we're buying a put. So could we do, it's trading at 443, could we do maybe the 435, like below this support level? Well, let's go see. Just to throw in a third trade, so we've got a triptych of trading strategies. So we're going to come out here. We're going to go out 3 weeks, come over to the put side and say, this 435, that's a 29 delta, which means we've got a 30% chance of it being in the money. That means we've got a 70% chance of it expiring worthless. That we've got a 10-cent bid-ask spread, check. Does it trade more than 1 million shares a day? Check. There is an example trading plan for short put verticals in that mini section also. So let's look at this 435. If we sell a vertical here, how much are we getting? Well, $1.13. Well, if you do a lot of these, if you get $1, that's on a $4 wide, a $5 wide spread, you're risking 4. So that's a 25% return on our risk. $1.11, I don't know exactly, but you're subtracting $5 from the $1.11. So that's $3.89, if my math skills serve me correctly. So, that's about a 25. It's saying did I do that wrong? 111 divided by 389. Yeah, it's a 28.5% return. Our rule of thumb is if we're in it for 21 days, we want a 21% return or higher. Generally, I like to see 25. So at $1.12, we go, okay, that meets our requirements, but we're risking the better part of $400. So we're only going to do one of these. So this is a base hit strategy, but the probability on these, depending on where you put your strikes, we're trying to create a higher probability trade. And with a long vertical, they tend to be more directional. It has to go through both strikes and stay there. With this one, it just has to stay above 435. And so we're going to put this in here. Fire in the hole. So, so our strike is down below here. If I draw this, and I like to kind of put these on the board, so to speak, or on the chart, so that when we look at this, it's a short put vertical, the 435, 430, expiring December 27th. Yeah. And so, this is never going to be a grand slam. We're never going to make, $1,500 on this, or, the most we can make is what we were paid when we got into the trade. And we're saying, we're cool with making just 80% of that. but it's higher probability in that as long as Microsoft stays above here, we should have a profitable trade. Okay. Okay, so we don't have a lot of time left, do we? Yeah, our 45 minutes, man, it comes, it goes. If you wanted to look for some other, well, let me just bring us out here. So, because I get this comment often in the surveys, could you just review what you did? So we did a buy right covered call on Unity. We did a long call vertical on American Express. We did 2 long call verticals, different strikes, different expiration dates on MasterCard. And then we did a short put vertical on American Express, which hasn't quite filled yet. Okay, so when we come here and we say, here's our American Express trade, oh, I guess it did fill. So I've got these sorted by symbols. Okay, so that's what we did today. Okay, so I hope you appreciate these examples. I wanted to show you at least 3 different trading strategies, okay? And then I just want to take a second as we wrap up to say, how are we going to manage these, looking at these daily? Well, I'm going to come, we've got now 1, 2, 3, 4, 5, 6, 7 short put vertical trades on. So what we're going to come over here and look at our profit and loss and say, are any of these up close to 80% or down over 100%? Nope. Well, we're done. Now, how about long call verticals? Are any of these up 50% or up close to 50% or down close to 50%? Well, we have Steel Dynamics, and that thing has been a stinker. Now, here's where we say it's come back down to this support level. Here's our strikes. Do we just call it? Because we still have more to lose. Our rule of thumb is if it's down more than 50%, we close it out. So we're going to come here to STLD and, oh, there's Microsoft. Sorry, that was the one I missed. I knew there was one more. Okay, we're going to come down to Steel Dynamics. Here are our strikes. We were hoping to get 345. That was the plan. Plans don't always work out. We're going to say better 65 cents than to lose all of it. So we're going to replace this and say, I'm going to take my $65 home with my tail between my legs, or my $130, and call it good enough. And you might say, okay, she just closed out 2 losing trades. Like, is she not very good at this? And you can argue, what my skill level is with this. But I find it having admitted when I was wrong quickly and then got hooked on hope, and that didn't work out very well, that by and large, I have always been better to just admit when things didn't go according to plan and take a little loss rather than wait and take a bigger loss. Okay, and that's worked out pretty well. Like, we started with 20,000, we're at 44,006. Like, that's an extraordinary now 13 months. And it's double what we have done on average in this class. And is that typical? Yeah, no. But it works, being disciplined and consistent and admitting when you're wrong. And you don't even have to say you're sorry, because it's just a stock trade. Yeah, somebody said hopium. It can be a 4-letter word. So there is a survey in the chat. So as we wrap, here's my ask of you. 1, if you would fill out the survey, I'd really appreciate it. There's 2 questions. It'll take you 20 seconds. 1 was, I hated it, I'm never coming back. 10, I loved it, I'm going to become a regular. Are going to stay a regular. So I love you guys. Thank you for that. If you want to put a comment in, strategies you'd like me to talk about, whatever you'd like me to discuss, I promise if you put a comment in, I promise to read it, so will the management team. Hit the like button. What that does is it moves things up in the algorithms. It lets Mike and I know that you found this content valuable, but more importantly, you could be helping a stranger desperate to figure out how to do this stuff, you could be helping them find us, and we'd love to have them find us. And then maybe you guys could meet and become buddies, at an event in somewhere close to you next year. We're going to be out, doing 23 live events. So I encourage you to check those out, and then subscribe to the channel if you haven't done that already. Last but not least, get out there and hug someone you love this weekend, or someone you like a lot. I don't know. But have a great weekend, folks. I'll see you Monday. Up next is Brent Moores, and he is actually, no, I think it's Cameron May doing advanced charting. But whoever's up next, you'll want to check them out. Have a great weekend, guys. Bye for now.